So the idea of this video is that I'm sitting down on the chart on a Monday morning, and this is exactly what I do. So I'm not going to waffle on any longer. I'm going to get myself onto the daily time frame to start off, and all I'm looking for is marking out any areas of liquidity that haven't already been fulfilled. Important, thing that I've said haven't been fulfilled. If they've already been fulfilled, price isn't as likely to react from this point again. For example, if it's a fair value gap. So I wouldn't mark up this zone because it's already been reacted from here, or it's already been fulfilled. Marking out this order block at the top. Truthfully, you could do my strategy without doing this, but it just helps, is the God's honest truth. Okay, so I'm going to mark out that bad boy zone as well. That's been fulfilled. Yeah, I'm happy on the daily. So go myself down to the 4 hourly. Got a breaker block here. Also got an order block here. Has been disrespected. Could get a potential reaction from that zone right there. Other than that, nothing really of note. Which is fine. If you don't see anything, you don't need to overmark out your graph because price isn't going to react from every single point. So just mark out points where you're very, very happy that there may be liquidity stored. Right, such as that one, I'm happy that there's liquidity stored there. I'm going to pop that there. I'm happy there's also get set down to the 5 minutes. Could have done 30 minutes as well, but just for the sake of the video, I'm gonna not do that. What I'm also gonna do is just fast forward to like 7, 8 a.m. in the morning. Get a reaction from Yax. That's the low. I'm gonna just mark that out. So I've marked out a unicorn model. Low, high. Low, high, lower, low. Just by 1 pip, but it's a lower low. The high, high with the candle finishes above the previous high. And then we'll get a retest of the zone where the breaker block and the order block, breaker block and the fair value gap overlap. Taking entry from there. And let's see what happens. Boom. Nice. 2.22. Eventually get to some profit. So while I put my stop loss, my take profit there, I want to come back a little bit. What we're going to see is that is a previous high. So prices then shut the liquidity of that previous high. So happy days, and the stop loss would just be at the lowest point of the unicorn model. So nice trade, nice win. We've had a little liquidity sweep of this zone. I think it's the daily zone. So potentially could look for a little short from this point. I don't love the setup. So it's just gonna be a 1R trade. So we're not like moving mountains or anything like that. Right, yeah, I'd be coming out with this trade. I didn't love the setup anyway. Right, that's more of a comprehensive move. Inverted fair value gap we've got. Still don't really love the setup. I think we're in an overall bullish market, so I don't really like going against it, but and then we don't have like that strong of a similar of a market reversal. You've got to be really careful on these daily time frame or 4 hourly time frame ones, because price may revisit quite deep into the zone before actually making a reversal. Let's just put the take profit at This little low here, this swing low. Again, not a huge trade, 1.23 RR. Do we just clip it? Yeah. We miss out by 1 pip. So hopefully it comes back down. If not, my stop loss will be a break even. Right, stop loss will break even. Is what it is. You can't win them all. That was. I don't kind of regret what I did there. If you notice, I still place my take profit at a level of liquidity, which you have to do. One of them things. So what we've got here is a break of structure and a fair value gap that occurs on that break of structure, which normally makes it a high probability. But what I'm looking for is a reversal because we'll have met this area of liquidity. So what happens is this fair value gap gets disrespected. So when price does revisit this zone, I've now got 3 confluences telling us that price is going to be bearish. Revisited. If price retraces to this fair value gap, I would take an entry. More where it's pretty much an inverted fair value gap. It does. You can stop that out. Boom, there we are. We'll get to your profit. So, as I said before, break of structure, fair value gap, disrespected, 3 things telling us that price was very, very bearish there. We'll get a long on. Just going to put it at this fair value gap up here. There's probably seeing the liquidity left. I'm going to get a reversal from that point again. There we are. Very, very nice. Very, very nice indeed. All that was recognizing that this pink area is area of liquidity, recognizing that price has reacted to this area multiple times before, and also having an inverted fair value gap, which is very easy to spot. It's when a bearish fair value gap in this example was immediately disrespected by a bullish candle closing above it. So reason I took this trade, I had a break of structure and a fair value gap which occurred on that break of structure. And so when price revisited it, took an entry, nearly got stopped out, but I didn't get stopped out. And the reason for that is because I placed my stop loss at the right place. I knew that price might not just revisit this fair value gap, but also the bottom fair value gap. So that's why I placed it there. Take profit at the next area of liquidity. I'd also like to make a point of something that I didn't even do well here. Also mark out the areas of liquidity on the 5-minute time frame. I think that's really, really important, if not more important, than your top-down analysis. I forgot, are your 1-minute time frame? Because if you're trading on the 1 minute, the chances are price is going to react on the 1-minute time frame to your order block, to your fair value gaps, all that good stuff. Hope you found this video very, very useful, and hopefully you can take it and use it to be placed in your own trades as well. God bless.